You're watching Investor Insights, and in this video I'd like to talk about high paying dividend stocks, or stocks that have a high dividend yield. These stocks are far and few between in this investment climate. There's a huge chase for yield caused by the Fed's quantitative easing measures. People can't get an income out of bonds. They might as well chase stocks that have dividends, because at least they get a better income from it. And along the way, they might score some capital gains along the process. But a high dividend yield does not necessarily mean that the stock is good. A high dividend yield implies that the ratio of the dividend payout to the share price is high. And that could be obviously for two reasons. The first being something bad's happened and the share price has collapsed. So as the share price tumbles, the yield's going to go up. So you should look at the past history of the dividend yield, and if you suddenly see a huge spike in yield, normally that means a drop in the actual stock price. That's warning bell. You should be keeping clear of this stock, because you don't want to be catching a falling knife. Something's changed, something's happened, you're going to get crushed. The dividend is not worth the capital losses you're going to incur. The second reason is, again, something's happened, but this time something's great happened. The company is making a lot more money for some reason, and it's deciding to reward its shareholders with a bigger dividend payout. It sounds excellent. I'm in. Problem is, stock prices reflect these things. And the stock market is a forward-looking mechanism. It's already anticipated such an event. It can see this from maybe the quarterly updates the companies give. It could be seeing it from its balance sheet, its cash flow. It could be looking at its acquisitions and the return on the investment of those acquisitions. There's a lot of factors, and most of the time the market has anticipated this growth in the dividend payout, and the stock price has already advanced before even this dividend payout increase is going to be announced. So odds are the second scenario is unlikely to happen. Sure, there's the odd chance that these opportunities do arise, but I think the odds are about as good as an asteroid wiping out all civilization on Earth. Yes, it will happen in due time, but for the time being, it's not going to happen too often. High-paying dividend stocks, as I said, are far and few between, but most of the time it's because of bad news. And if you find that a stock is consistently paying a high dividend, then there's something wrong with the company. There's something, the stock people aren't warming up to it. People aren't buying it, and they certainly don't want to invest in it, because despite the company giving out such generous dividends, the market either doesn't see any growth prospects for the company, or the market expects the company to have a downtrend in its growth, or they just don't have any faith in the management. For whatever reason it is, if a stock's dividend yield goes up and up and up, and the share price doesn't go up with it, I would stay the hell away. Because eventually the market's going to catch up. And when it does, and you happen to be long, I say this over and over again, you're going to get crushed. So, to recap, just because a stock is paying a high dividend does not necessarily imply that it's a stock worth owning. You've got to take into account all the factors that's making the company pay out such a high dividend yield, and you've got to look at the reasons why the stock is not rising as people try and bid for the stock to try and get this dividend.